is with a very warm heart that we welcome you to today's episode of Tax Matters. My name is Olumuyiwa Matuluko. As we've been, work has resumed in earnest all over the country upon the completion of the Salah celebrations. We want to thank God Almighty once again for making it possible for us to witness yet another Salah. Life must go on. As they say, only two things are certain in life: debt and taxes. Taxes are, however, regulated by legislation. There must be certainty as to which taxes to pay, how much to pay, where to pay, when to pay, and how to pay. Things began to fall apart in Nigeria in the latter years of military rule, when all manners of levies, charges, and fees cropped up in the name of taxes all over the polity. Pundits had a field day making distinctions between taxes and levies, user charges, and fees. And rightly so, because indeed there is a world of difference between taxes, levies, user charges, and fees. But to the common man, to the average man on the street, it is money from his pocket. Whatever he pays, as far as he's concerned, he has paid to government. The question was it because Nigeria was under military rule? Was it because there was no rule of law? No answer was forthcoming. But then, help came from the same quarters, as the federal military government in 1998 promulgated Act 21 of 1998, which clearly listed out the taxes collectible by the three tiers of government in Nigeria. Upon return to civil rule on May 29, 1999, Decree 21 became Act 21, T2, Laws of the Federation of Nigeria 2004. In addition to listing out the taxes collectible by the three tiers of government, Act 21 also outlawed the use of roadblocks and spikes in the collection of any form of tax or levy on the highway. Respite came, but only for a while. Under civilian rule, the quest for improved internally generated revenue began to also push the local governments and the states to begin to impose all manners of taxes, levies, fees, and charges. In recent years, the Joint Tax Board and indeed the federal government has received complaints from stakeholders. The Association of Licensed Telecoms Operators of Nigeria came calling. So also the Cattle Dealers Association of Nigeria. And recently, the Manufacturers Association of Nigeria, which was hosted by the Federal Executive Council. And so you may ask, what is the situation on ground? We all experience it every day in one form or the other. Just on Thursday, the 3rd of October 2013, we were moving from Ekiti State into Kwara State, and we got stopped by these guys on the highway. What did they want? They asked us to pay mobile advert levy of 25,000 naira, supposedly for all the local governments in Kwara State. We refused. We explained that we were just passing through Kwara State, that we were in transit. All our entreaties fell on deaf ears. But we stood our ground, and they took us to the local government headquarters. In fact, we were relieved that they had an office. We waited for the head, and when he came, we explained to him, and he reasoned with us. But guess what? We lost 8 hours. And then these testimonies from some respondents. You will find the very first one particularly interesting.
Take the issue of vehicle, for instance. Sometimes, about a year and a half ago, there wasn't a plate number in Lagos State, and I went to Ogun State to go and register a vehicle, a bus, a staff bus. And you can imagine the number of payments I have to make. What I do understand that if you have a vehicle, you get a vehicle license, you get insurance, you get your roadworthiness. But these days, you discover that even with the roadworthiness, they be demanding so many things that, that you've been wondering that if they have issued you roadworthiness, are they saying that that paper was nothing? As I'm standing here, I have about 20 papers that I paid for in Ogun State for registering that bus. One of them is light and heavy unit permit. Harmonize all local government light and heavy duty permit, another one on heavy duty. Agriculture permit for the staff bus. Then harmonize agricultural permit again. Then interstate maintenance permit. Then interstate road maintenance permit. As you are getting for one, you are getting for the harmonized one. Then you have sewage disposal permit for a staff bus. So you have another one that is called corporate articulated vehicle. Another one, hackney permit for clearance. Another one, sanitation permit for the same vehicle. Then all local government sanitation permit, harmonized. Radio and TV permit. You can go on and on like that. I mean, you'll be wondering when your staff will phone you or phone the manager and you are asking a question and they are saying that they've been arrested because they don't get a NOGE permit. And you say, what is NOGE permit? They say local government permit to ride. But for what? Am I an employee of the local government or what? Just on a vehicle. You see this lot of distraction coming your way because you are operating business in Nigeria. Well, we have a restaurant also. For that one, we have land use, we have food permit, we have fire, radio and TV, parking permit, environmental check, fumigation permit, vehicle license, all and all. You start to wonder how you can concentrate on your core business when you have all these things coming to you.
We were going to Umuahia, and when we got to Onitsha, they stopped us and said we should come and pay radio tax. I asked them, under what authority are you doing this? They say they are here with a policeman. I asked the policeman, who sent you here? When I told him whom I am, he said, oh, guy, you can go. If you go from Lagos now, if you are getting to a place called Ojoda Abuja, and your vehicle is painted or it has a sticker on it, on the body of it, they will stop you. They say they are from Ogun State, that you have to pay a different a different type of tax. Even if you say you have paid in Lagos, they say, no, that is for Lagos State, you have to pay. So that is a whole lot of cost to running business. If somebody is an entrepreneur, he's he has a small and medium-sized industry where he produces. If he's running the business in normally, for him to go to Jode Abiodun, which is less than 2 kilometers, that means he has to pay another type of tax, which is not prepared for. And that will impact on his cost of production.
Look at Lagos State. They've just promulgated consumption, hotel and restaurant consumption tax. If you look at it, it's double taxation. If you go to any hotel or restaurant now, you have to pay 5% consumption tax, at the same time 5% value-added tax. So in that situation, there is what they call double taxation. Then at the same time, we have of recent, I learned that some local government in Lagos State, they are demanding for tenement rates from some companies, whereas since 2000 it has been repealed and replaced by Land Use Charge Act. So anybody, for instance, now charging those two now, you can say it's a double taxation. But multiplicity of taxes is what we are talking about, because, for instance, you are a salary earner in Lagos State now, you pay as you want. If you have any development project in Ogun State or your state, you need a tax clearance certificate. They will not recognize that tax clearance certificate. You have to go and pay another form of taxes again.
Need we say more? Well, the good news is that help is here. Succor is close, very, very close. The Jonathan administration has decided that enough is enough. It has decided to look at the matter holistically and find a lasting solution. The National Economic Council comprising of the Vice President at the head and the governors from all the 36 states, has placed host to the Manufacturers Association of Nigeria, and after that meeting, an ad hoc review committee was set up to look at all the issues and to find a lasting solution. The ad hoc review committee, headed by the governor of Gombe State, Alhaji Hassan Dankwabo, submitted its recommendations to the National Economic Council, and the council decided to set up a Ministerial Implementation Committee, MIC, under the leadership of the Coordinating Minister of the Economy and Federal Minister of Finance. On Monday, the 21st of October 2013, the Ministerial Implementation Committee, MIC, was inaugurated by the Minister, the Federal Minister of Finance, Dr. Mrs. Ngozi Okonjo-Iweala. Mr. Fidelis Ugbo, Secretary, National Planning Commission, had this background information on the Ministerial Implementation Committee.
The Manufacturers Association of Nigeria, they made a complaint about excessive and multiple taxation being levied on their members, making the cost of doing business in Nigeria very prohibitive. On the basis of that, they made a presentation to the Federal Executive Council and subsequently to the National Economic Council, which the council set up a committee which was headed by the governor of Gombe State to look at their complaints and make appropriate recommendations on ways and means of harmonizing taxes and levies paid by their members nationwide. The committee came up with a number of recommendations for implementation, and some of the recommendations were approved. And on the basis of that, a Ministerial Implementation Committee was set up to agree on the modalities for implementing the recommendations. Today's inauguration meeting, therefore, which is being chaired by the Coordinating Minister of the Economy, is to bring all stakeholders together to work out a smooth implementation of the recommendations, as well as looking at the actionable points that will be presented in order to give effect to FEC and NEC approval and decision.
In a keynote speech, the Honorable Federal Minister of Finance had this to say.
This is going to be a historical piece of work because you're going to be delivering something which for a long time we've wanted to have done and which we believe strongly, as you see from my speech, needs to be done in this economy in order to move us forward in an environment in which business is experiencing a multiplicity of taxes, transporters are experiencing a multiplicity of taxes. The key requests and recommendations made by MAN to Council include 1. Review and amend the taxes and levies. 2. Stop the use of unorthodox means to collect taxes and levies. 3. Automate tax operations by relevant authorities to eliminate leakages and ensure ease of collection. And 4. Publish the approved list of taxes and levies within the states and local governments to facilitate compliance and educate the public. This particular one is really very important because one of the things that makes it difficult for businesses to thrive is the uncertainty in the tax environment. At least if you know what your taxes and levies will be, you can account for them, pay, and make adequate provision. When you're uncertain whether somebody is going to come and stop your business or close it down and ask you to pay a levy, or it's even worse. In particular, for small businesses, small and medium-sized businesses, this is a very difficult issue as they have the least capability to bear the uncertainty in the environment. According to the Manufacturers Association report, some states have as many as 97 different taxes that are imposed on businesses. Maybe we want to call them levies, because sometimes they are just levied on the spot. This is simply not economically viable. In addition, the multiplicity of taxes on the transportation of goods impairs the integration of internal markets and the establishment of a fully integrated economic space within Nigeria. Through this impairment of the integration of the national market, these mobile levies, we should call them, because they are levied on people, as I said, without notice as they move their goods and services. These mobile levies also reduce competition between companies located in different states in Nigeria. With increased competition, we could bring down prices for consumer goods further, produced by these companies, and make our products both more competitive in the local and external markets. I urge that we see ourselves as one team, working for the development and progress of our country, Nigeria, as we commence our deliberations. I always say that though we may have 36 states, federal capital territory, 774 local governments, and one federal government, there is only one Nigerian economy. And I hope that all of us here will work together for the benefit of this Nigerian economy.
Yes, indeed, there's only one Nigerian economy. Alhaji Kabiru Mashi, acting executive chairman of the Federal Inland Revenue Service and chairman of the Joint Task Board, presented the roadmap for the implementation of the National Economic Council's resolutions on the matter.
Further to the adoption of the recommendations of the next ad hoc review committee, a major decision was reached for the setup of a Ministerial Implementation Committee to develop the roadmap for the actualization of the Council's resolutions on this matter. There is a parallel subcommittee of NEC working on fees and charges payable by the operators in the telecoms business in the country. In this regard, the Joint Tax Board has been mandated to liaise with the National Communications Commission to obtain these fees and charges as contained in their regulations. As we go along, we may have to co-opt some members of that committee into the MIC as we are working towards a common objective. The detailed roadmap is here presented to the House for consideration and further action.
The relevant institutions and the expectations from those institutions are contained in the roadmap.
The institutions at a glance are as follows: Federal Minister of Finance, the Presidency, National Economic Council, the Federal Revenue Service, the Joint Tax Board, the Nigerian Police, and Office of the Inspector General of Police, and state revenue boards and local government authorities. Other important stakeholders are the National Assembly, Ministry of Trade and Investments, Corporate Affairs Commission, National Communications Commission, and Office of the Attorney General and Minister of Justice.
There are items in the roadmap which are meant for immediate implementation, those which the minister in her keynote address referred to as quick wins. There are those that also have to be implemented before the end of the year 2013, while there are yet some that are for long term. One major aspect of the roadmap is the agreement that Act 21, which is now about 15 years old, needs to be amended to be brought in tune with modern day realities. But in the meantime, it was also agreed that the law is the law, as succinctly put here by the chairman of the Rivers State Board of Internal Revenue.
You see, the law is the law. You amend the law or you obey the law.
After opening formalities, members of the Ministerial Implementation Committee sat down to discuss the roadmap and chart the way forward. It was agreed that it was necessary for the various states to bring to the table all tax laws passed since the enactment of Act 21 of 1998, with a view to harmonizing them for a smoother tax system across the land. The Ministerial Implementation Committee will meet again in the middle of November 2013. Addressing the press later, the Coordinating Minister of the Economy and Federal Minister of Finance further appealed for the cooperation of all.
If we take this one-team approach that the National Economic Council wants us to take, I have hope that voluntarily, without having to compel anybody, we will go through this list and we will all agree that some of these levies are really too much.
Perhaps a good way to end all this is to go back to our respondents to find out what suggestions they have as to the way forward. Who knows? The MIC may find their suggestions useful. What are your suggestions towards minimizing, if not eradicating, this menace?
There should be a proper documentation of the taxes collectible by the various tiers of government. And when this is done, there should be a proper enlightenment, especially on the part of the revenue collectors. Because a situation where somebody who is even collecting the tax is a tout, collecting for a local government, he doesn't know what he's even supposed to do, there will be chaos and anarchy, especially at the local government level. They use touts to collect taxes. And incidentally, most of these taxes they collect do not go into the coffers of government. Because when these people come out, they print their own receipts. When you look at the receipts, you also know that no government agency will use this kind of receipt. Because Nigerians are also in a hurry, they want to pay and continue their journey. Nobody goes back to report about anything. The issue with Nigerians is that you can't go back and report anything. You say they will waste your time. After all, it's 2,000, 3,000 or whatever. Nobody wants to spare the time and say, let me go to the office and report. These people who authorize them, then government should also give the benefit of tax. There should be dividend of democracy. We can't continue to treat cancer with aspirin and expect that people will come to our hospital.
The way to minimize some of this problem is just like what the federal government has done through FRS, by trying to what we call integrated tax office. For instance, now everything has to be integrated. All the taxes that are due to state should be collected by one agency. In one point. Not that land usage will come and do their own, they want to come and collect. Business premises, they want to come and collect. Then all these particular taxes, so let them be integrated. So that we now know that if you are come from state, everything will be addressed at once. If you are coming from local government, everything at once. Not that Lassa will come, whether you are doing it, developmental agency will come, whether you are doing it. So everybody is now appointing their consultant. So let this thing be integrated at state level as the federal has done their own. For instance, now all the income tax, all the taxes applicable to federal now, they are being anchored by one unit. So they will see your own this thing, they will do it and forget about it. And at the same time, the yearly audit from state, although it is good, but they should try as much as possible to combine about 2 or 3 years together. It's not this year you appoint new set, and that one will come. Then at times the state will not even finalize with 2000 the previous years if you appoint another person. So that's what they do. They are at state level on yearly basis. They will look at your record for 2010 differently, 2011 differently, 2012 differently. So at times you will not even finish the prior year. The state will appoint another one again. Now, if the company is saying that they are not going to cooperate with them, they will say they come and lock them up. So at least at any point in time, whether they should do it, even though it is okay, they can still get the information in good time. But at least if they can combine 2 or 3 years together, it makes life easier. Not to be appointing a consultant for each of the years. It's too monotonous, it's too cumbersome. So it doesn't allow some of these companies to even work.
We want to thank you most sincerely for finding time to watch today's episode of Tax Matters. I want you to believe, I want you to have faith that very soon nobody will stop you for taxes on the streets. On that bright note, we say thank you once again. See you around next week.